All right, my friends, it's your old pal Peace Love Music, and we are back. We have another live guest segment today. We have Jeff, the founder of BSD, Base Dollar on Stacks. What's up, Jeff? How you doing today, man? Thank you for joining us today.
Hey, GM, thank you so much. Happy to be here. And it's great. I'm doing great. I'm getting ready for the holidays. Yeah.
Yeah, it's a lot. It's fine. You can feel it winding down. Things are getting a little less chaotic, except for us, where we book back to back to back interviews on the same day. But
You seem like a very, very busy guy to me. Yeah. Like when I've been watching more and more like bits and pieces and segments, and I'm like, this guy is always live on the internet. Always.
well, and we started. We've been doing the daily live streams for Monday through Friday for a little over. We're just going on almost a year and a half, about a year and 4 months. We started out of Stacks D Grants cohort 2 last summer of 2024. And it's iterated from doing like a 15 to 20 minute like good morning check-in to an hour long show to an hour and a half show with a couple of different news segment and a guest spot and game show, and then other segments throughout the day, like different shows. We had Landy coming on and doing TA. We used to produce Melanie's good kitty Melanie's show and Bitcoin and Beyond show. We do the SIP shows on Friday, and then so it was like in October. It was like, you know what? Why don't we just stream all day, and then we can drop in. So some of what we play throughout the day is just reruns of recent content segments. So what, after I'm done talking to you today about BSD, and I know that there's a ton of people out in the Stacks ecosystem, especially in our audience, that want to know more, very interested in the project. We'll cut that out and we'll replay it throughout the next couple of weeks to get more exposure. So people don't have to just tune into the live, but by doing the live stream all day, we can more accommodate founders like yourself for us to come spotlight. So, but this isn't about me and what we do. This is about you today. So I am relatively new to your project. We met a couple weeks back. There's a project that I've been working on with Rafa, and we had you on to talk to us about some stuff. Just not on, but we had a meeting. That was the first time I met you, and then you just happened to be on the Bitcoin and the Bitcoin building on Bitcoin show with the Bitflow guys, which is also they have their show today too. Last week, and I heard a little bit more, but I really want to get a handle on what you're building, because I know there are definitely options for dollar stable coins is important. We don't want a centralized system. USDC coming to Stacks is great, but I'm a huge fan of what Jacob's building at USDH, and I think just more options in the marketplace make the ecosystem stronger and better for everybody. So I'm really intrigued about your niche and what you're working on with BSD.
Yeah. Nice. Thank you so much for that tee up. And before I jump into that, just to sort of put a final point on everything you were saying about the show, I really appreciate what you're doing for Stacks and what you're doing for Bitcoin, and there's just so much work to go around. So I think you're really providing kind of a valuable service for our ecosystem. So thank you.
Thank you for saying that, man. I really appreciate it. We work hard, and there's a small team behind me. There's a lot of people chipping in, but it's a lot.
Yeah.
It is a lot. If I'm being honest, it's a lot.
Yeah, I can imagine. Let's see here. Yeah, I'm happy to give a little intro, and then I'm happy to talk about BSD base dollar, and then I've also got I've got teed up here to do a live demo on testnet.
Awesome.
And I think it's the first time I've ever live shown people like how to take a loan in BSD, and there's a few other features to look at too. So yeah, I'll launch into that. Sound good?
Yeah, actually, why don't we start with a little bit of your background for those that don't know?
Yeah, sure. So I've been doing interface work as either a front end designer or front end engineer or product leader at tech startups for about 20 years now. Got into crypto about 2018, and really was looking for like where I could contribute, and happened to get introduced to the Stacks founders back then. And yeah, I worked for Hero for a number of years, and then spun out my company I have now. There was a bunch of kind of like Hero alumni that spun out small companies all around the same time, like around 4 years ago, when the ecosystem was really decentralizing, and the token launched, and then what we kind of currently think of as like Stacks 2, or like the first version of Stacks that had smart contracts. All around that time, a bunch of people started little development companies like mine, and worked on a couple different things in Stacks over the years, and been working on BSD now for about a year and a half, like heads down building. And yeah, like we're finally live. We have a live beta that's up right now. And yeah, we've got, you know, real loans, real Bitcoin. We've got real dual stacking working. Like it's been also for us, it's been a long road. And you know, when you start building one of these protocols, you just always realize that it's like 5 times more work than you thought when you first started. And it's
Always
really, yeah, and it's always, you know, there's always kind of the steep learning curve and kind of hard education on computational tasks that, you know, are pretty simple, but when you try to do them on a blockchain, involve all kinds of funky stuff that you have to design around. So yeah, that is kind of the background. Yeah, now I'll kind of launch into what, you know, BSD is and why it exists. Sound good?
Yes, sir.
Great. So, you know, a Bitcoin collateralized stablecoin is not a new idea. There's been various permutations over the years on a couple different L2s. But it's one of the things that like the early Stacks team, like us, when we sat around thinking like, why would we want to build the blockchain in the first place? It's to enable things like this. This is like very core building blocks of Bitcoin DeFi. So, you know, Bitcoin lending and stable coins. So I've been talking about this idea with the early Stacks team for, I don't know what now, 5 or 6 years, you know? And so I also was a really big fan of liquidity on Ethereum. I just thought the mechanism was very elegant, and thought it was a kind of beautiful hybrid between a lending protocol and a stablecoin. And so I always thought that had a lot of value, and I thought it was like a you know, a mechanism that really leaned on the strengths that you get on a blockchain and really can't be done in CeFi, and is really something quite special. And so I kind of like, I don't know, fell in love with the idea, I guess you might say. So that's really one big motivating factor. Not to mention the fact that, you know, there's sort of huge markets in lending, huge markets in stablecoins. So yeah, the closest thing that exists currently on Stacks is Arcadico. So, but Arcadico started as a Stacks-based collateral stablecoin, and they've kind of added Bitcoin, and we wanted to just do Bitcoin from the jump, and wanted to also include, you know, all of the sort of like latest and greatest mechanism design insights that the Liquidity team had, and which is like, you know, effectively it's like Liquidity 2, which is the current version that's running on Ethereum. So we you know. We like look to them as thought leaders and say, how are they solving these problems? And then essentially copy them. So a nice way to summarize like what BSD is, that stands for Bitcoin synthetic dollar. And a nice way to summarize what it is it's liquidity on Stacks, but instead of ETH, you know, you swap in Bitcoin. That's like the simplest explanation. The core mechanisms are roughly the same. And yeah, I mean, it allows you to lock your Bitcoin. This is SBTC in this case, and mint a synthetic dollar against that as a loan. And it's a closed loop system. So you know, there's no fiat, there's no like under collateralized borrowing. It's like a system that is designed to to add debt as long as the Bitcoin is backing that amount of debt, and then to wind down that debt or deleverage that debt in an orderly fashion, so that the system is always over collateralized. And the idea of minting stable coins against collateral is very old and very simple, but all of the complexity around that, what I just said, comes in with the liquidations and the redemptions, and also tracking tracking the vault state across many vaults and trying to do aggregate operations on them on a blockchain is very tricky. So all of the, it's like 80 or 90% of the work is the last few things I mentioned, but the core mechanism is pretty simple. Yeah, I'll pause there. Do you have any other questions before I go into the demo? Like any other?
Yeah. So it's similar to with all the regulatory that's coming on around dollar stable coins. A lot of people are suggesting ways to, leverage. Basically, it seems like they're trying to establish, the traditional, the government and the traditional finance system are trying to establish rules around stablecoins, which mean that they have to be T-bill backed. It seems like that's the goal. I don't think that that's necessarily the right way to go. I can see why they would want to, but it seems like what you have now and how it's designed now is basically similar, except for instead of a T-bill, you're just backing it with Bitcoin. I mean, is that more or less how do you peg the price of the dollar? How does it stay at $1 for a BSD token?
Yeah. I probably won't go into a deep legal analysis, but I think my guess is that you'll probably see additional guidance and things come out in the future that specifically address mechanisms that are not, T-bills held by, a private entity, or like, I guess, it could be like a public entity as well. I think that there's like a distinction between those two things, and there could be further regulations around other mechanisms as well. But you were asking how it works. That was the question.
Yeah. How does BSD maintain? How is the dollar value pegged for the Bitcoin synthetic dollar?
Sure. Yeah. So it follows the same mechanism that Liquidity uses. And so I don't know if they were the first to figure this out, but they were one of the earliest teams to kind of figure this out, which is it's like a redeem mechanism. So the basis for it is that there's a protocol operation called redeem, and you can always bring BSD to this function in the contract and say, I've got BSD and I want to exchange it for like face value, the same exact face value in dollars for the underlying Bitcoin. So like the reason it's worth $1 is because you can kind of always go exchange it for $1 worth of Bitcoin.
Okay.
Yeah, that's the core mechanism. And so that alone, that kind of what that does is that's almost like a singular trading venue that will always consider BSD worth $1. And then you can imagine other trading venues like exchanges where it goes off that peg, right? Like it could be just the way like Bitcoin trades for different prices on different markets. Same thing is happening here. BSD could trade for different prices on different markets. But the sort of game theory around that is that if the price is above or below, it doesn't matter. In both cases, there's an arbitrage you can do. So you can basically by minting and redeeming BSD, you can basically just make money doing that. Just make a profit doing that, and in doing so, you will nudge the price closer to equilibrium. So if it's above, you'll push it down, and if it's below, you'll push it up. And so like I said, the sort of game theoretic kind of aggregate behavior of this is that the price kind of always seeks $1 through time. And so that all sounds like very hand wavy and fancy, but I mean, Liquidity's been doing this for about 5 years without it.
Sure. Well, and honestly, it makes sense because if I see it on Bitflow and it's trading for under $1, I know I can buy it and then take it over and exchange it for Bitcoin at $1 and play the arbitrage. there.
Correct.
So
Yeah.
that
Yeah.
seems like a no-brainer to me.
Yeah. Yeah. And in fact, I think it's last time I checked, it actually is on Bitflow. Like, um, it actually is trading above $1 on Bitflow, so you can go harvest that. I don't know what size that is. That might only be worth like $10 of profit. But anyway, that's the point, or that's the concept.
Sure. No, and that's awesome. I mean that will peg it to $1. I can always exchange it for what the $1 worth of Bitcoin is more or less on the market right now, then it's just an arbitrage play elsewhere. So that's I like the model. I think it's very
Yeah.
interesting. By the way, introducing you, I don't know if you've met GP, my main co-host and partner in crime over here at DeOrganized. He was handling some stuff for Zest Protocol, and he's done with that. He's a community manager over at Zest, amongst many hats he wears.
Hey,
And,
what's up,
Nice.
Jeff? Nice to
Hey,
meet you,
what's
man.
up, T? Yeah, we haven't met, so it's great to meet you. Thanks so
Yeah,
much.
man. I've been really interested. It seems like BSD kind of just like popped up out of nowhere, and I was like, "What is this BSD?" And then I'm seeing Tycho and others post about base dollar, and I mean, it's awesome to get to connect and kind of understand more about it over the last couple weeks, and then also got to listen in whenever you talk to Diego and Dylan from Bitflow. So really cool stuff, and congrats on the launch of your liquidity pool over there as well. And yeah, man, cool stuff.
Nice. Yeah, thank you so much. Appreciate it. We made a lot of noise about it when we first started developing it, like I said, about a year and a half ago. And then, we thought it would actually, development on it would go a lot faster. And so we really went into a cave basically for a while and then came back out. So yeah, thank you for all the kind words.
Of course, man. So I guess my question to you is like, what's next? Like, where can they follow and all of that stuff? I've got your page up here.
Yeah, it's on
I guess
on.
website
Sorry,
and take a look. Just saying, let's take a look at tell the people where to find you guys as well. At BSD Money, right? That is your at.
Yeah, correct.
Awesome, man. Awesome.
Yes, this is good. BSD.money, and then BSD Money on X is a great spot. That's a good place to start. A bunch of long form content there, all the links you need. Yeah.
Awesome.
And
started your
we started it was about 2 weeks ago, probably ish. Yeah, and you were asking about what's next. Yeah, our besides the beta, launching dual stacking support, so the Bitcoin that you use as collateral is earning, was a big one. Getting the Bitflow pool is a big one. We're working right now on we kind of heard that people are interested in like looping, right? So you can basically loop you can take the BSD and buy more Bitcoin with it and do so in loops. And you might kind of wonder why would you want to do that? I mean, there's like leveraged exposure to Bitcoin, but probably a more compelling reason is to buy more Bitcoin and then deposit it into the vault, and then you can basically roughly triple the amount of SBTC that you have earning with dual stacking. So we've been working on that. We've got a calculator for that, and we actually have done some simulations of that and found the places where there's inefficiencies or just goofiness, and so we're polishing that up. I don't know how much people actually want to intend to actually do that, since it's kind of it's definitely a riskier use case. So I wouldn't encourage anybody to do it, but we're at least going to demo that and create some content around it and sort of say like, hey, this machine of ours can do this crazy looping thing. That's another big one. I think besides that, after that, those are like the core features. We also have worked on, I'm not sure if we're going to release or not, but we're working on like a rebate program to basically just give back the fees to the early users. And then another big one too, which is kind of like in the skunkworks state, is we have a really nice chatbot, actually. So we've got a super AI enabled chatbot with its own custom tooling like toolkit that can query our database directly. And so you can basically ask it anything about the protocol. It's like, it's probably about halfway as good to being like me as far as the protocol. I mean, it knows everything in the docs. It knows how the contracts work. And like I said, it has live state to the protocol. So you can ask it like, hey, my particular loan, like, what do you recommend for, like, if I wanted to increase the collateral ratio or decrease the collateral ratio or whatever, like anything you want, can you advise me on that? And it can just look up all the details about your loans, like live specific details, and then like give you like specific customized advice. So that's like, I think that's very interesting and very forward thinking. And like, I'm really proud of our work on that. The caveat on that and why it's taking longer is because just like any other AI thing, it hallucinates more than we like. And we're trying right now to get it to really just behave the right way and not give people false answers, so especially when you're asking about a detailed specific thing, like, what is the collateral ratio on my loan? You need it to give you and you're trusting that answer to like give you guidance on, is my loan healthy and is my loan safe? It can't hallucinate or say anything, inaccurate. And in fact, if it somehow can't grab the data, it needs to say, I can't get the data, I'm sorry, and not just hallucinate a crazy answer that's made up. And that's some of the, I think they're very bread and butter, like AI or agent challenges, but we're working on that right now. I think that will be, I'm not sure, I'm also not sure on that, like how much actual growth that will drive, but it's certainly like a really impressive chatbot. Like I'm kind of amazed at what our engineer has done with it. So that's also coming up probably like early January or mid-January.
Very cool. Very cool. So I am definitely, just because I love to understand how things work and I understand the risk, and, just preface, this is not financial advice. We're just learning how this all works. But the idea of looping is very interesting to me, because it is a way to leverage with maybe more control than in some other circumstances, and leverage your Bitcoin position and accumulate more Bitcoin. You were going to take us for a walk through the beta. Can you kind of show us what it would look like to loop to do that?
Yeah, potentially. Like let's see here. I probably won't be able to show you that end to end because, like I said, I'm going to use testnet because the actual live mainnet setup is like a multi-sig, and it's just like there's a lot of complexity to it. So testnet is exactly the same, only I can sign transactions and stuff in 5 seconds, and also it's fake money, so we can play with it more. The problem is I'm not sure if I can actually swap on Bitflow on testnet. I don't think I can. I think.
Oh, so you wouldn't be able to actually purchase.
Yeah. I gotta go take the BSD and buy.
You can show us. You can actually show us the mechanisms, and then we can talk through the next step after that.
Sure. I'll probably start with just showing you kind of like the basics of how it works. Just like to start a new loan, and then we can work our way up to that if we have time. Sound good?
Sounds good to me.
Cool. Let me see if I can get the screen sharing working the right way here. Give me a moment. Right. Okay. I think I got it.
Yep. There we go. You
Cool.
are on, sir.
Vault 14. There we go. Right. Cool. So yeah, this is the view. My account has already created a handful of vaults. So this is not exactly what you'd see when you start fresh, but it's pretty close. So I'll walk you through creating a new vault, and then I'll show you some of the details on these existing ones. So yeah, like the first step, this is like the core mechanism. So I'll probably kind of explain a lot of details here. So step one is adding some collateral, and kind of everything else, follows from there. So, depending on the value of that collateral, which is like computed, on the fly, that kind of tells you how much you can borrow and like what your collateral ratio will be, right? Let me see if I can get this a little bigger without ruining the layout. Is that a little bit better?
Yeah, that's good. And actually, we'll put us off to the side. So
Nice.
that's good.
Yeah. So, so how much collateral you have and how much it's worth kind of like sets the tone for everything else. And so the app auto populates just some default values for you. Probably the one that's important and also super familiar to most people is collateral ratio. So this is like how close to the full value of your Bitcoin is your borrowing worth. So it automatically picks 150 as the default. As you can see, you can make the numbers safer and like harder to get liquidated essentially, or you can do it riskier all the way down to 120, which is 10% above your liquidation. But this is kind of like the first important decision to make. One of the things I'm really proud of with BSD and this like style of mechanism is there's not like a lot of trading like complexity and risk for sort of like UX in the sense that users are like totally in control. Like every parameter about the way this thing works, you have control over and you can decide yourself. So it's unlike a vault or something where there's other people managing your money, you're making all these decisions for you and taking complexity away for you. This is like all controls are available to you type product. So anyway, I'll just leave it at around 150. So we're locking up $85,000 of Bitcoin and we're borrowing $56,000 against it, or 56,742 BSD. And then then you set the interest rate. And the one thing that's a little screwy right now is that we have some vaults that are on the testnet that have like crazy high interest rates because it's fake money and our devs put in 20% APY and stuff for testing. So this estimate is not really correct. And as you can see, you can lower this all the way down to 0 and your redemption buffer is 0, but you can also just tick it up a tiny bit and probably get a buffer that's a little bit higher. Yeah, so like 47% is a gigantic buffer at 3.29. So there's just some squirreliness around this on testnet, but you pick your own interest rate on BSD. And
so the interest, the lower the interest rate, the more risk of. So I don't quite understand redemption buffer.
Yeah, I'll tell you. Yeah, exactly. That's probably the trickiest part of the BSD protocol is how this interest rate and redemption buffer thing works. And it's also confusing to people on liquidity as well. So you can see right there again, because we've got relatively few vaults here. Like you can see the numbers switching between 47 and 4 as I move this. That means there's like a vault sitting in between those two numbers that's like eating that chunk of the range. What it means is that, like I said, when people redeem from the protocol for the peg, that Bitcoin has to come from somewhere, right? Like we're not a bank. We don't like hold a bunch of Bitcoin on the side and sort of pay deposits and withdrawals out of the same pile. Like there's essentially no extra Bitcoin in this system. And so when you need to go redeem, you have to pull that Bitcoin from somewhere. So what happens is the vault that has the lowest APY in the system, it draws from, and it's when you do that, the redemption, it pays off the debt and it takes the collateral and then gives a like bonus to that vault. So so some people are happy to do that because they profit in the process, and then other people are really averse to that because they're like, hey, I don't want anybody to redeem my Bitcoin. I want to keep that Bitcoin for myself forever, and I don't want to part with it no matter what happens. And so you can choose your risk appetite, using this mechanism. And
so I can actually set my APY to a lower point where if it gets redeemed at that point, they're actually redeeming the Bitcoin. I end up. So how does that work though? I still have my BSD, so I can still redeem that at some time.
Well, you can. That's right. Yeah, exactly. You keep the BSD, and they pay off your debt, and also they pay off your debt and take your Bitcoin, and also give you some profit in the process. So yeah, so you don't lose money in dollar terms. In fact, you gain money. Well, what you lose is the underlying Bitcoin. but you gain in dollars and lose in Bitcoin, I guess.
Right. So you can't pay off your loan and get your Bitcoin back. You can only redeem the BSD.
Yeah, but then so if you found yourself in that situation, then you become another redeemer, and so on and so forth until the chain, stops. You can always so either if it's either through redemption or through closing your vault, either one, they're both routes to get your Bitcoin back. But it's definitely superior to lock up your Bitcoin as collateral and mint, and then pay off your debt directly, because there's fees associated with redeeming, and then also that debt is over collateralized. So to get all of your collateral out, you need to your extra collateral, right? Because it's over collateralized. You need to manually wind down your vault. So redeeming and paying off debt are two different operations, really. It's a bit in the weeds. I can explain that more in a second. But anyway, the important part is that the redeem is a core mechanism that helps BSD stay soft pegged to $1. And this is the risk tolerance you have for being included in those redeem operations. And so the actual interest rate. So another way to sort of say about this is in our docs, is this is a market, really, right? So every vault chooses this, decides this answer for themselves about what they want to pay, and then the market moves and adjusts as the perceived risk changes. And so if there's no redemptions for a while, maybe everyone becomes more aggressive and lowers their interest rate. And then if there is a lot, they might raise it, and the average and stuff will shift over time. And an important part about that is we run on epochs. So every 2 weeks, every week, we have a little process that runs that basically takes. So you can change this APY anytime you like. You can update it 10 times a day if you want to, but that's kind of a commitment to change it. And then every week, all of those updated rates kind of snap into place, right? So there's some game theory around why it needs to kind of operate that way, to allow people to not game it and abuse it. So it's sort of every week you get to redecide this answer and decide your risk tolerance. And also the rate is not important. What's important is where you fall on the stack of other vaults. So it's the relative number that's important, not the absolute number. So 0.79 might be a very risky number in the beginning, and then it might become a very safe number 2 months from now, or vice versa. So this is an active monitoring thing. And another plan that we have to work on here, which we haven't actually worked on yet, but we have an affordance in the protocol design for it, which is to create a service that you just delegate this to, and then you just tell the service my risk tolerance is the following, and it will auto adjust the rate every week for you to buy you the amount of safety that you want to aim for, because you don't want to have to mess with checking on this every week.
Oh, so you're going to be able to automate that so that it stays less risky if you want to?
Correct. Well, right now you have to specify this is the rate. So I'm going to pay, my APY is 0.79% per year. But if you say and that's to buy myself roughly 5% of buffer. But if I wanted to, let's say do a little bit higher. Yeah. So this is, like I said, this is hard, but do it a little bit higher and say oh, I always want to be around 50%, right? Then there's a service, that, again, this is a liquidity thing. They have this. There's a service you can delegate this decision to, and just say, keep me at 50%. Just modulate the interest rate as you need to hit 50% within some boundaries. And so that's
that rate means that 47% of the rate, the relative rates are above where you are or below where you are, so they're going to get paid off first.
Kind of. What it means is that 47% of all BSD has a lower interest rate than you do.
Okay.
So
right.
So it's basically 47% of all the debt across all of the vaults will be redeemed before your vault will be redeemed.
Okay. Yeah. So if you keep it at 50, you should be generally safe, unless there's a huge a huge fluctuation or a lot of volatility in and out kind of thing. And
Yeah. Yeah, a lot of volatility would do it. Like major entries or exits out of the Bitflow pool might do it. But I think that like my gut level from just watching like the liquidity ecosystem and just sort of my own thinking about it is probably like even 20 is like super conservative. I'd say probably more like 10 or 15 is probably a reasonable target. Yeah, and so analytics around this and stuff is kind of like a hot topic for us, and I'll show you some analytics for it in a second. Anyway, this is a decision that you need to make, and then you're done. So you basically have a borrow fee, which right now it's set to 0, and then this is how much BSD you're gonna mint in the process. So those are our 3 choices: is add how much collateral, decide how much to borrow, and decide what you want to pay as the interest rate. I know that's like a lot of stuff to cover, but it's just those 3 choices.
But it's what makes the mechanism function. These are, and I actually think it's a really clever design. It's interesting. I know you're saying I'm not familiar with liquidity, so this is all very new to me.
Yeah, it's a way to get dollar-like behavior with an over-collateralized, sort of valuable asset backing it, and no fiat and no custody, no counterparties. It's just code running. It's smart contracts and a keeper that triggers some of these things, like some of these operations and things. But that's it. Yeah, so I'm ready to go ahead and mint. Sound good?
Yeah, absolutely.
Cool. So like I said, we'll lock 1 Bitcoin and add and get ourselves 56,000 BSD. Yeah, you guys can't see the leather pop up, but
we cannot. But we know. But we're familiar with not being able to see that, or we do a lot of the screen sharing depending on who's on and what's going on. So I know what that's like. For the viewers watching, Jeff's getting his browser wallet pop up to confirm the transaction, and now it's already gone through.
Cool. Yeah, so that was successful, and there's a few different like sort of error states and things if it doesn't go through, or if there's some kind of post condition not met or whatever. Yeah, another thing I'm pretty proud of is we've got like really good post conditions set up on all of our transactions. So there's like, I don't even know, there's like probably 20 plus things that can like not be set up right, and so you really have tight assurances when you say like, only this much SBTC is going to exit my wallet, and I'm going to receive this much BSD, or the whole thing will abort. Like, it's very, very complete in that sense. So yeah, here we go. So this is Vault 15. We just created it. There's no chart data for it yet. That has to buffer. I think that's like on a 10-minute sort of buffer time. So we'll have to wait for that. But you can see just the parameters that we put in there. So we got this much. Go off that. We got this much BSD borrowed. We got this much collateral ratio, 150%, the interest rate, and then the buffer, 47% or that equates to about 70,000 BSD. That's before us, and then a few other details here. But every operation we do will also be like recorded here with the transaction, which is really convenient. And so yeah, like I said, like this whole product is like very like very composable and very kind of user controlled. So you can at this point like everything, like unlike like CeFi loans or like a loan like I'm trying to give a good example, like Lendin, for instance, like a CeFi loan, like that has a fixed term and it has penalties and all this other kind of stuff. This is like everything that all the parameters we just set, we can adjust at any point we like. So we can borrow more, we can pay our debt down, we can add collateral, or we can remove collateral, and we can change the APY. So, and that's like a free for all. You can do it.
So I
can do it 10 times a day. You can do whatever. Yeah.
So I can actually add BTC. I could buy SBTC with my BSD.
Yeah.
and then add that SBTC right into the vault. So I don't have to
Yeah.
create another. I don't have to remove. I don't have to redeem the vault and open up a new one. I can just add the SBTC to that vault, and
Yeah.
then that strengthens my position, makes me less volatile, less risk, and or I
Correct.
can then also potentially borrow more BSD.
Yes, correct. That's the looping, right? You just keep on doing that in a loop, basically. So yeah,
Right.
you can see right here in this little panel, like this is the total amount. I had some, other BSD I minted before, so that's why I've got more. I've got SBTC here, so this is like my balance, that's specific to this app. Each of these has its own little wizard, just like the borrow or just like the vault creation screen does. So like the borrow tells you like this is where everything currently stands. And if I say, what if I want to borrow 5,000 more, for instance, right? And it basically gives you a readout on like the old collateral ratio was 150. The new collateral ratio will be 139. But it's like, oh, I want even more. I'm willing to take even more risk, right? You can just see how as I'm borrowing more and more, this collateral ratio is going down, down, down. And it also should tell you, it tells you right here the liquidation price. So like I think this is a little bit easier to understand. So it's like if Bitcoin goes down to this amount, like which is not, it's not that far away from the current price.
No, it's definitely within the potential. It could happen right now with where the price is.
So then you'd be liquidated, right? Your loan would be like forcibly closed. You keep your BSD, but the protocol takes your Bitcoin. So you have to play with this. This is a risk tolerance thing. This is like how actively you want to monitor the vault and what your risk tolerance is. But that's borrowing more, and then you can also repay, and then you can, like I said, add or remove SBTC. So you can say, I think this is what you were saying before. So imagine we went and took our I think 56,000 BSD and we went to Bitflow and swapped it. Then you would get, you'd have like, I don't know, 0.6 or something more SBTC, right? So your old collateral ratio is 151. Your new collateral ratio would be 242, and you would be able to borrow an additional 124,000 BSD, right? So you just like bumped up your borrowing capacity. So I can take it down to 0, and you can see as I'm adding BSD or as I'm adding SBTC, my capacity to borrow is just going up, right? So yeah, that's like I said, it's really customizable and composable. And then I'll also mention you can change the rate as well. So, and we have delegate, but it's not working yet. But you can see like just make it more risky. You can see current interest rate, no pending change to the interest rate, and your buffer information here. And then, you can see like this is how this change is going to affect the buffer. So 47 down to 4. So this is just like all of these screens are basically saying you can adjust the vault setup that you created in the beginning. And I'll pause there. I can mention some of these other features if you guys want, or I can answer questions.
I think there's a lot of moving parts, but I think it's pretty straightforward once you kind of get a handle on what they all mean. Obviously, this is something that is a little bit more of an advanced user. At least getting into the more complex strategies on it. If you're just looking to borrow and get a little bit of capital to deploy, borrow against your Bitcoin, you can do that. That's pretty straightforward, and you can do it with pretty low risk based on the tools you have here. But there is also a lot more. People can engage in more complex strategies like looping. I think it's really interesting, man. I think it's a great tool to have in the ecosystem. Very cool, and definitely would love to. So, what are the other tools that you were looking at up the top?
Yeah, sure. I was just going to show you. This is a vault I created already, and the the charting process has already run on it, so you can see how the collateral ratio is changing over time, like with the trend of the Bitcoin price, basically. And then also same thing over here. You can see how your redemption buffer is changing in real time in comparison to everybody else, right? So for this chart, you want this chart to look like solid red lines going up and dotted red lines going down. That kind of indicates health. And when they cross, then you need to be paying attention. So can't scroll over this here, but yeah, it's just basically because this guy's redemption buffer is down to 12. It's starting to throw warnings at me and say, hey, you should be worried about that.
So if that went over that top line, he would be over his liquidation ratio.
They're not the same data. It's kind of maybe it's a confusing chart, but they're two different data sets. But you want to know, basically you want to know what your buffer is and how it's trending, and then you also want to understand the average of all the other vaults. Is it trending up or down? Like you need a directional sort of understanding here. And so you want your buffer to be high, and you want to know, like, are you on the good side or the bad side of the trend, basically.
Makes a lot of sense. Sense.
I'll quickly mention just a couple of other things. One is the stability pool, which is basically how holders at BSD take advantage of liquidations to earn some profit. So this is another liquidity invention, and it's basically like rather than have like outside liquidators, it's like a built-in liquidator into the protocol. So this is how vaults get liquidated is with the stability pool. So you can deposit BSD here and wait for liquidations to happen, and then profit off those when they happen. And this chart kind of gives you some insights about what to expect about upcoming liquidations.
Oh, so I could actually deposit, instead of depositing into a vault and withdrawing BSD, I could also deploy my Bitcoin. Or is it, I'm sorry, you're adding BSD here, or you're adding Bitcoin?
Yeah. The way this works is BSD goes in and Bitcoin comes out at a 10% profit.
Okay. So I create a vault. I withdraw, I take out BSD, or I create BSD, borrow that against my Bitcoin, and then I can deposit that in here. And that is used to
liquidate vaults that have a bad CR, where their CR gets too low.
That pays off the vaults at a profit.
Yep, correct. Yeah. So the vaults liquidate when they're at 110 collateral ratio, and so the 100% is what's clears out the debt, and the 10%, like the remainder, goes to the people that deposit into this pool.
Oh, so that can be pretty lucrative.
Yeah. In fact, there's this is a very bursty kind of thing. Like when there's no liquidations, the APY is nothing, and then when there's liquidations, the APY is quite high. And like around the October 10th crypto crash that happened, just a couple months ago, the liquidity APY on the same mechanism went sky high. I don't know what it was. It was like over 100%.
I'm sure it went, because there was drawdowns.
So that's one other feature, and then the redeem is what I mentioned to you before. So if I'll just say we minted about 50,000 BSD, so I'll put 5,000 in here. Uh-oh, that does not seem correct. Single redeem max. Wow. I don't know why it's doing this. This is funky. This is a funky thing on testnet because it's not working this way on prod. Anyway, you put in the amount of BSD that you want to redeem, and it basically gives you a quote right here, and then you just click redeem, and there's a fee associated with redeem. So you're basically again trading BSD for SBTC. So this is the quote of what you'll get, including the fees.
Very cool, though. I understand testnet's buggy. You don't ever know what's going on. We actually, for a lot of times, we haven't done it as much recently because GP got overworked. We're not doing the night show as much as anymore. But we used to have testnet devs come on all the time, and we would literally just try to break stuff. So it's we know what that's not a thing at all. We're just walking through, seeing how it works, and that's actually almost a good sign when you see things on testnet
Yeah.
get a little wonky, but
Yes.
makes sense how this would work. You're redeeming. You're going to get SBTC in exchange for that BSD. There is a redemption fee. It's like 1.7% on there. Is that
Yeah.
and is that fee variable? Like, does that change over time? Is that just what you guys set based on?
It's like it's like a pressure. It's a pressure amount, and it like cools down over about 3 days. So like when you redeem a big amount, the fee goes up, and then it like takes 3 days to cool back down to its lowest, which is 5% or sorry 0.5%. So it's to prevent like there's a few, I think, like kind of like game theory abuse vectors where you're just like redeeming more and more and more and creating more and more and more debt. And so it's to like cool down that behavior basically.
Right. No, and that makes sense because it stabilizes the platform too. It helps stave off a run.
Yeah, correct. So anyway, yeah, that's just an automatic thing in the smart contracts where the fee is like basically dynamic. And like I said, if you do a big redemption or somebody else does a big redemption, you're better off waiting a couple of days for it to cool down to get the like lowest price.
So that redemption fee is platform wide. It's not based on an account. So if another whale makes a huge redemption, the redemption fee is going to be high for a couple of days.
Yeah, it applies to everybody equally. Yeah, correct.
Is there a cap on that fee?
There is. It's some parameter set somewhere. I don't know what it is. It's probably, if I had to guess, it's probably 5%, I think.
Yeah, that makes sense too, because I mean it needs to function properly. You know, it has to have enough teeth to to protect the platform.
Yeah.
But man, this is really cool. Very well thought out, well designed. I know you took some of the design from Liquidity, but it's still a really cool product. It's unique to what's on Stacks. There's nothing quite like this on the platform, so I'm really very excited. And are you looking for people to test it out right now? What's going on? Or we're just waiting for mainnet launch, and then at that point you're going to be you're ready to go.
Yeah, I mean we're doing like a private beta, so we have like a handful of folks that have joined. You know, I can like send a like a registration link or just like manually approve addresses, and so it's all working on mainnet right now. You know, I've got a bunch of BSD minted with real Bitcoin, so it's all functional. It's just in a private beta, and so yeah. Happy to have people test it and play with it. And the best way to do that is just to reach out to the BSD handle, like DM or DM me. Like just basically all I need to do is send you a link in order to get started.
Awesome. We will definitely, both GP and I, we don't have as much time as we used to, but we love pushing buttons and trying stuff out. We do give feedback. So be happy to test out for you. Shoot me a link.
Yeah, absolutely.
Or we can get some addresses over if that's easier for you. We just whitelist.
Yeah.
I know I don't always speak for GP, but I know I can speak for him on this, that he'd also love to try it out.
Yeah, I want to tinker.
Yeah, good for that.
Yeah, man. Awesome stuff. We did go, I know I told you it would probably only be about like 15 to 30 minutes. But we're chatty. We chat a lot, and you actually had a lot to go over. There's a lot of moving parts there. So I really think that this was great. I think it was a great opportunity to get our audience exposed in depth with visuals on what you guys are doing. So really awesome having that. It takes me a couple of days because of the way everything runs, and because we're on I can't even start editing clips until after the live stream's over, which won't be till later today, and then I gotta wait for the transcript to upload so I can really do it right. So it might be a couple of days before I get the full segment, but we'll also replay this a few times throughout the next couple of weeks, so it'll get a little bit more exposure to the audience on the regular for a little bit. And then would love to have you on again sometime soon when things are more mainnet full launch and everything like that too. I really think it's a great project you're working on, Jeff.
Nice. Yeah, thank you so much. I really appreciate the the exposure and the chance to show this off.
And it's at BSD Money on X, and it's BSD.money is the website that people can go check it out now. You got docs on there and stuff like that people can go through.
Yeah, that's the right two places to go look. And like you mentioned, there's a really like robust documentation site. Every single thing I mentioned and said is all explained there, and a bunch of other like product comparisons and FAQs and all kinds of stuff.
Awesome, man. Thank you so much for joining us today. And we'll definitely have you on again soon. Like what you're working on. And thank you guys all for tuning in. We will actually be back again with one more guest, and about half an hour, Rafa is going to come walk through Fact Fun, his capsule project, and the BTC to SBTC project he's working on. So we got more live content coming on. Jeff, any last words before we sign off?
No. Let's see here. I love Bitcoin, and I love working on things that enhance Bitcoin. And
Right on.
Yeah, it's been a long road with this, and I'm just very proud of our team and what we've built, and excited to share more.
Awesome stuff, man. Looking forward to more from it, and thank you for the work you've been putting in. It's really cool stuff you're working on, and it's making Bitcoin better, which is what we're all here for.
Yeah, thanks, guys. Appreciate it.
Right on. Thanks for joining in, GP. Always a pleasure having you as well. And we'll be back with Rafa in about 40 minutes. I'll put something on in the meantime. Thank you all for watching. Stay tuned, and we'll be back later. Y'all have a blessed rest of your day.